Hey, hello. It's Neil from Clever Property Investing, and I'm doing a series of videos and sort of sessions now for you guys to watch back that hopefully you'll find useful. Basically, I've gone out and asked some of my students what they would like topics they would covered over the next few sessions, and I've been given a list of topics. So I'm going to go through those topics quickly with you and just let you know what I'm going to talk about and then which one I'm going to try and cover today. So we've got various topics. One is create marketing materials for off-market sellers. So we talk about the marketing materials and generating sort of interest from off-market, in other words, not going through agents, not going through the traditional ways of sales agents to find a property. Another one is raising investor capital. So if you want to get into property and you don't have exactly too much of your own capital and you want to raise capital, or you want to joint venture, or you want what we call angel money, people lending you money to help you buy your property and then you pay them back. So that's another subject we're going to cover. The current market conditions, that's something that also I'll talk about. It's probably more relevant each time we do a session. So I may do that one multiple times or at the beginning of each session, a little bit of where the market is. How should you talk to agents, or how should you talk to auction houses? So there's a quite a popular one on how do you communicate with agents and get them to work with you, perhaps give you the best deals that are coming on, maybe tell you about deals that may not quite be hitting the market, all these kind of things. How do you work with agents to get those kind of messages across? Because we all know that you go and register with an agent and you just get bombarded with ridiculous amounts of emails of properties that probably aren't really the ones you're looking for. Maybe sort of 50% of them could be filtered out. So how do you get to work with agents and also with auction houses, which is a separate subject again, which we might do those two together. Exchange with delayed completion. There's one on how do you work with a vendor or somebody or an agent or solicitors, whatever it is that you need to work with to exchange later on in the process of purchasing. There's various reasons why you might want to do that. One of the reasons is about adding value and getting the value up later on. And then finally, we've got one that says negotiating lower prices with agents, vendors, whoever. How do you get the best price for you? So those are the topics. And I think what I'm going to do today is I'm going to do a quick topic, basic one on market and current markets at the moment. So we are now, what is the date today? 25th of April, 2024. And the markets are changing all the time. Ridiculous amounts of changes going on, ups and downs, different times. You talk to different people. Yesterday, I spoke to a solicitor who said 2 weeks ago it was very, very slow. Now she's seeing a massive amount of activity, lots of people buying. You talk to various people like agents, ask them what's going on. At the moment, agents are saying they're seeing a lot more properties coming on, excuse me, but a lot less people buying. So there's more and more people getting into a situation where they think I need to sell, or I've got to sell now, I need to move this property for whatever reason. But there's less people coming on. Now, why are there less people coming on board? Well, you know, for some time, interest rates are going up. There's talk again of another possible interest rate increase. You know, we've gone from sort of 0.25 to 4% in quite a short period of time. However, if you've been in property long enough, which I have, this kind of rate that we're at the moment isn't a terrible rate. We were at these kind of figures, this kind of interest rate back 15, 20 years ago, and you know, even higher. So realistically, the rate increases and the negative press and news we're getting out there is one of the things that's putting people off buying. Now, as a property investor, we look at all of these things, and when we're doing our figures and when we're doing the correct way, we work all of these into our property numbers, and we say, okay, we're going to buy it for this. It's going to cost us this to on the interest rate. It's going to do X, Y, Z. All the anomalies, all the main points we bring in, and we factor those in, which then gives us an indication whether it's a good deal, whether we want to go forward with that deal, whether that property is going to generate us income or whether it's going to generate us money on a flip. However, we're going to do that, whatever it is that we're deciding to do with our strategy. So the reality is there are lots of properties coming on the market at the moment. There's not as much activity as there was 6 months to a year ago of people looking at property. So there's less people looking, there's more properties on the market. What does that mean? It means it's a strong opportunity for you as an investor to get involved with buying a property, because if there are more properties available on the market, less people looking for the properties, then the chances are you're going to get a better deal on something, or you're going to be able to negotiate. And that's another topic we'll talk about later. So current market lettings as well at the moment. I heard something recently on a news podcast that the government's frozen for the last 3 years housing benefit, and the actual market for rental has gone up considerably in the last 3 years. So whereas they used to give housing benefit or universal credit to people, and they used to give them, the way they worked it out was they would give you enough money to be able to rent a property in the 30% lowest section of the market. So for example, if you look at the rental market as a whole, 100%, and what you might pay the top level for a rental market, the housing benefit or universal credit used to be in the 30% of that. So down the bottom end. So basically the bottom end of rental prices, but it used to be able to cover that. Well, of course, now the markets have gone up quite considerably. Demand has gone up quite considerably, so that's forced the rents to go up. And of course, the universal credit hasn't gone up and has been frozen. So there's a huge debate going on at the moment about social housing. Is that an area you would be considering to get involved with? Well, it's certainly a massive demand. However, getting universal credit to pay for that is also a challenge right now. So those of you thinking of getting involved in social housing, it may be an opportunity there for you to negotiate and get better rents, because by default, the councils, the government aren't giving out the full amount for rentals right now. It's causing a big delay. Now, this is over 30 years now. There's been a real glut in the amount of property that the councils have been building or creating for social tenants. There just isn't enough. And so at the moment, it's nearly 50% of that market is through private landlords. They're having to come to private landlords. Now, you may be in a situation where you might be able to accept a lower rent and still make yourself money because of the way that we've bought the property, or the way that we've looked at the figures and the numbers. It may be that you can afford to go into that market and get sort of guaranteed rent without any worries should there be anything like a pandemic. So these are all things that you should be considering and thinking about. Certainly in the private rental market at the moment, I believe that we're getting into a very strong opportunity to buy. I think house prices are going to drop as well. We're going to see a lot of that. I think we're going to see a lot of people coming with properties, suddenly finding out they're not worth as much as they thought they were because the prices are dropping. We're already seeing a decrease in London of house prices. And again, I just want to emphasize that this is all my opinion, my thoughts and my process and how I'm looking at things. I'm not a qualified accountant or a financial advisor. This is just how I see the market and how I feel things are going to go. So if it's something that you're looking at and the areas you're looking at, you should definitely do all your research and your due diligence for yourself and make sure you can qualify what's going on. So market at the moment, for me, I think it's quite exciting. I think it's quite a good opportunity to get involved and get sorted out with the market and do the things that you need to do to get on the market and buy your buy-to-let properties. There's a whole change also in policies at the moment. The government are now focusing on serviced accommodation. So that's where you would have something like an Airbnb or something you rent out on a very short-term basis. Up until recently, or well, currently at the moment, you can have better tax advantages or better offsets for being in that market. For example, Scotland right now are very close to changing the legislation, whereas we've had a very good period of lots of people where landlords were forced by the government as well, because the buy-to-let markets weren't so great. They've taken their property and said, okay, well, what happens if I turn it into a serviced accommodation, or I rent out the property on a short-term basis, a week, 2 weeks, 3 weeks, whatever it is at a time, but I can charge much more and get much more money for it and make better money that way. Well, Now the government are focusing, their focus is coming towards, what do we do about this area? Because it's unlicensed at the moment. There's no legislation. There's nothing there. One of the councils are, or one of the things that the councils are looking at doing, are making you license the property. So you have to apply for planning permission possibly to convert it or to change it of use from a buy to let into a serviced accommodation or an Airbnb, that kind of thing. So that might be something that's coming in very soon in some areas. Certainly in Scotland, they're definitely thinking about doing something along those lines. So you've got, again, you've got to work out whether this works out for your numbers or not, whether your figures are going to work for you, whether it's a great opportunity. So the market at the moment, I feel, is exciting. I think you need to do your due diligence. You need to decide what strategy you're working with, what your goals are, what you want to achieve. Remember, property is not a get rich quick scheme. There are very, very few people that do get rich very quickly as a result of going into property and buying investment. It is a long-term investment. It's a year, 2 years to get you to where you maybe want to be with your income generating properties or flipping, whatever it is you want to be. But the potential of property is long term. Like I said, I've been in property now I've had my first property over 20 years ago now. And that property has increased in value, increased in rent, and it's actually well worth the initial investment I paid. Remember, when I first bought that property way back then, I was worried, I was panicking about whether or not I was paying too much, whether it was going to work out, whether I'd done the right thing. Well, now 20 years on, even 10 years, even 5 years on, I realize it's a great investment. And for me, property is investment for life. It's something I'm building, and it's a legacy I'm going to leave for my family, my children going forward when I don't need it anymore. It also means I've got a pension plan, so to speak. It also gives me a lot of opportunities not to have to do jobs that perhaps I'm not interested in doing or I don't want to do, and I can pick and choose where I want to be and what I want to do. So remember, all of these things you've got to put in. It's very easy for someone. I've had questions over and over again. Should I buy a property in what area? Well, I can't answer that question straight out. They're getting to know you without getting to know your circumstances, your structure, your potential, what you want to do, how much you want to get involved, how much you don't want to get involved. There's so many questions, and one of the things we sit down with you for a couple of hours and make sure that all of that's in place and set the goals and targets that you want to achieve. Anyway, it's Neil, just letting you know what I'm going to be doing over the next few weeks, and also giving you a little bit of a market update, and hopefully that's been useful for you. If you're interested in property, get out there. If you want to talk to me, you want to get involved with me, then please by all means get in touch with me at cleverpropertyinvesting.co.uk. There's a contact us page there. You can go and book in a session with me for 15 minutes. And I'd love to hear from you. If there's something you want to ask, even just a question about anything that is worrying you, go and book in, have a chat with me. Happy to do a chat with you, 15-minute chat with you, no problem at all, as long as I've got that time in my diary. Anyway, great to speak to you. Have a fabulous day, and I will see you soon. Take care.